Sure, well, Bank of Japan is a slightly different situation compared to the Fed and the central bank, right? Inflation is Japan is, I mean, they would like probably to see more inflation. It's intrinsic almost in their culture, I would say, to see inflation coming up, which I don't think we're going to see anytime soon. So the situation for Japan is very different. I think you were touching on it slightly earlier, and the exposure towards Asia market more in general. And I think that's what investors are looking for right now, especially in order to position their portfolios for 2023. There are prospects in China, an emerging market in general, but especially in emerging Asia, that are more appealing to investors right now in terms of growth, I think.
Okay, one or two more questions on inflation and central banks before we move on to other stuff. Because I've done the spoiler. You don't think they're going to hit inflation targets in 2023.
Right.
And so I presume that means that interest rates have to stay higher for longer, which is what the hawkish Madame Lagarde's been talking about. Yeah. Relatively hawkish Jay Powell and others as well, including Andrew Bailey and the Norge Bank and the SMB, etc., and the Riksbank, you name it. So the point being here is, what if the rates stay higher for longer, what does that mean for portfolio construction from your point of view?
Sure. Well, it means two things, I think. The first one is that, generally speaking, bonds look more appealing to investors, to medium to long-term investors, because yields are higher. So a lot of what we have been seeing over the past 10 years, I would say, from investors, it was like, oh, what should I do with bonds in my portfolios because the return, the income that I get is too low. To some extent, in 2022, we have seen the opposite. It's like, oh, bonds are not necessarily good for diversification. We do believe that bonds stay good for diversification, and now the yields are higher, so they are more attractive from that perspective. I think that for the US, there is also an additional element, which is, if indeed we reached in peaking inflation, which I think it is the case in the US, yields are pretty much high, much higher than the mean that we have seen over the past year. So I would say that there is positive upside risk in having those yields really peaking already, and therefore even for an investor that is positioned more for the shorter term, that might be good news in terms of capital appreciation in 2023.
Well, what's the argument for equities at this point? I mean, I know probably a lot of retail investors who are sitting on losses as we come to end of year are probably adjusting their investment horizon and timeline as they think about when they might actually start to see black back on their equity funds. But is there an argument at all here for owning equities next year? And if so, which ones?
Yes, I think, well, I mean, again, for investors that have multi-asset portfolios, there is always an element for owning equities. We're never going to suggest it to some extent to tilt massively towards one asset class compared to another. So the idea of being diversified globally and across different asset classes holds. I think that, again, for 2023 in particular, there is a slightly better case for bonds. So compared to a strategic asset allocation, let's say, of a 60-40, we're tilting more towards a 50-50 for the short term. Equities, they still make sense. Valuation came down. We were discussing this earlier. They came down a lot. I would say that in the US, it's still a little bit overpriced. I wouldn't necessarily say that we quite reached fair value there. But in other regions, for instance, Europe, and I was discussing emerging markets, especially emerging market Asia, the valuations are way more attractive, and growth also looks more attractive in those regions. So for 2023, there might be more reasons for positioning to those two regions.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.